Good afternoon and welcome to the ChinaMed Tel Aviv University China in the Mid-Med series of online seminars. Today's session focuses on China's energy interests in the Mid-Med. This series of webinars looks at China's role in the region from the inside-out perspective and is intended to complement our earlier series that looked at China's role in the Mid-Med from a global perspective. My name is Friedman and I am the Director of Research at Tel Aviv University's Moshe Dayan Center for Middle Eastern and African Studies. My co-hosts are Professor Sela, the Chair of the Department of East Asian Studies at Tel Aviv University, Professor Enrico Fardella, the Director of the Center for Mediterranean Area Studies at Peking University and the Director of the ChinaMed Research Project, and Dr. Andrea Ghiselli, the Director of Research for the ChinaMed Research Project and a researcher at Fudan University. It's my distinct pleasure to introduce our guests and panelists for today. And first I'll begin with Antoine Halff, who serves as the Chief Analyst at the Earth Observation Platform and energy data analytics company Kayrros, which he co-founded in 2016. He's also an adjunct senior scholar at Columbia University's Center on Global Energy Policy, whose Global Oil Markets program he established in 2015. He has over 25 years of experience as an energy market analyst on Wall Street and in consulting, publishing, academia, government, and international organizations. President Bill Clinton called his edited book, Energy Poverty, Global Challenges and Local Solutions, published by Oxford University Press in 2014, a must-read for anyone serious about creating meaningful solutions to end poverty. Thank you for being with us today, Antoine.
Thanks for having me.
Our next guest and panelist, Dr. Mikhail Nedan, is the director at the China Energy Program at the Oxford Institute for Energy Studies. Before joining the Oxford Institute in July 2019, she headed cross-commodity China research at Energy Aspects. Prior to that, she headed China Matters, an independent research consultancy providing analysis on the politics of energy in China. She has also taught undergraduate courses on China's political economy at the Hebrew University in Jerusalem and has authored numerous academic articles. Michal holds a PhD in political science and East Asian studies from Sciences Po in Paris, and she is fluent in Mandarin and French. And finally, we hope in a few minutes, Dr. Marco Pierreda will join us. He is a senior manager at Eni, the Italian global energy company, where he is the head of political scenarios and institutional support for business development. He has a BA in political science from Luis University of Rome and a PhD in constitutional law and an MA in administrative law from the University of Bologna. Before becoming a civil servant, Marco was engaged in academic research on public law and government at Rome Luis, University of Bremen, and other institutions. He worked for 6 years for the Italian government in the Financial and Banking Directorate of the Department of Treasury. He joined Eni in 2008 to work in the External Relations and Communications Department. He then worked in legal and regulatory affairs, focusing on government relations and energy sector legislation in Italy and worldwide. In 2017, he became the head of analysis and international relations for the development of the oil and gas businesses at Eni, which included responsibility for legislative affairs and relations with government authorities. In 2019, he received his current appointment and he is responsible for the MENA region, the Americas, and the Asia Pacific. Marco, we hope you'll join us in a few minutes as well. So I thought we would get started with perhaps a general conversation, given the unique nature of the coronavirus crisis, of where energy markets stand today, and in particular how that affects China and perhaps China's interests in the Middle East. And if I could ask each of you in some way to relate to that question, maybe that'll open the dialogue to other issues. So Antoine, if I could ask you to begin, please.
Okay, thank you. I think to put it simply, the coronavirus was a major hit to the market, probably especially the oil market and the energy markets more generally. Probably I would say the biggest shock to the market since the 1973 oil shock of the Arab oil embargo. And I think it's equally transformative to the market and equally transformative to the governance regime of the energy market, although in very different ways. The market today has recovered somewhat from the very low prices that we hit in April. We actually hit negative prices for a couple of days in the futures market. But prices remain on the low end, in the low 40s for crude per barrel, and they will likely stay quite subdued for some time. But I think the long-term effects are very, very significant, and I'm happy to go into more detail about this. But the executive summary, I think, is that we're coming out of this crisis with a market that's increasingly dominated on the supply side by just three players: the Saudis, the Russians, and the US. They were dominant before the crisis. They're coming out more dominant, and they will continue to be dominant to dominate the oil market for the foreseeable future. On the demand side, China is increasing its market share. So China has been the main driver of energy demand growth for the last 20 plus years. It was already a formidable presence in the market, but it's more so now. And it's remarkable that in the last month or so, or the last 6 weeks, as the market has been rebalancing in the wake of the price crash, China is behaving very differently from all the other players. Inventories, for example, rose dramatically worldwide, but are falling now in most of the world. They're rising dramatically in China at a very steep rate. Refinery operations in China are at a record and recently exceeded 15 million barrels per day. So this is extremely high. Imports are at a record. So China is really increasing dramatically its footprint, and is starting to be more assertive in governance institutions, which is the first. So in the future, I think we have an energy market where crude will continue to play a large role, despite the move away from hydrocarbons and from fossil fuels, and where the crude market will be really dominated no longer by OPEC and the IEA, as was the case in the last 50 years or 47 years, but increasingly by a group of 4 large players: the Saudis, the Russians, the US, and the Chinese. The Chinese being the largest importer of energy in the world, but also now the largest producer of renewable energy capacity and electric vehicles. So that, I think, sets the stage for the energy market and the way in which the ISMEC plays out in the energy market.
Thank you, Antoine. Michal, did you want to add something at the start?
I mean, I think, COVID has been really interesting. A number of things that actually struck me in terms of China. The first was, and yes, it was a massive, obviously, shock to the oil market and to energy markets globally, but actually I found the relative inelasticity of demand in China surprising. I mean, if you look at it, passenger freight, industrial activity, they all collapsed by anywhere from 50 to 80% in Q1 year on year. Oil demand, however, fell by, I mean, if you look at the official data, 15%, if you do your own data, 25%. That's still not as bad as you would have thought. Again, the economy ground to a halt for 2 months, and yet the oil demand impact was sort of 15%.
Is very bad.
Gas demand, similarly, we saw sort of, again, on the official statistics, we saw
Michal,
very limited
Michal,
impact.
if I could ask you to hold on 1 second, I apologize.
No worries.
And if I could ask you to mute your mic just so it doesn't interfere with the speaker, my apologies.
I was switching up. Yeah, I'm switching up.
Okay. Okay, Michal, go ahead. I'm sorry to interrupt.
Not at all. So as I was saying, I think the sort of inelasticity of demand, again, gas demand, if you look at the official stats, was up year on year in Q1. Again, if you do your own numbers, it was probably down 5-7%. Again, it's not dramatic in the context of the economic shutdown that we saw. power demand fell, but again, very interestingly, renewables, as was the case globally, were very resilient, and renewable power generation actually increased in Q1. So I think that was sort of interesting to see just how much China still consumes energy despite this massive shock. I think in terms of the recovery, we're seeing a lot of front loading on the supply side. So the imports have been extremely opportunistic. It's been both the majors and independent refiners, which are a very interesting new force in the Chinese system that have tried to capitalize on low cost crude, to a lesser extent gas, but crude very much so because they have huge storage capacity. But I think we will have to wait and see if the demand is actually there. Even the refinery runs might be sort of, again, front loading a lot on the supply side, and China is going to end up with a lot of excess crude, refined products that will have to find their way somehow into the global market, even in this current depressed stage. But interestingly, at the beginning of the crisis, there was a lot of talk about sort of supply chains, right? And relocation of supply chains, not just because of COVID, but of course, US-China has already highlighted that trend of concerns about being over-reliant on China, or whether countries would have to choose between the US and China. And there was a sense that the world was moving towards a relocation, or sort of a fragmentation of supply chains. And very much at the beginning of COVID, a lot of countries were waking up to this, their reliance on China, be it for PPE, for the medical equipment, or for other things, and saying, hang on, this needs to change. Well, if China is actually front loading on all these supplies and is coming back faster than other countries, China will be the best place to supply, be it oil products and other sort of consumer goods, when the rest of the world begins consuming again, but other producers and manufacturers perhaps haven't recovered just as quickly. And perhaps a third and final observation here, I think the other interesting thing was that after COVID-19 and in the Lianghui, in the two sessions that convened a couple of months ago in Beijing, we saw the government work report, and for the first time, at least in this 5-year plan, energy security was on the official agenda. And energy security, we typically think about it as import dependence, or wanting to mitigate the vulnerability associated with high imports of oil and natural gas. And that was, of course, one thing that was discussed. And part of the kind of crude buying binge and this appetite to store is related to that, to hold enough reserves in case of emergency. But really, the way energy security was discussed was much broader. It was about the resilience of the supply system, the flexibility to deal with demand shocks. Because when you speak to the Chinese officials and you say to them, well, the world is awash with oil, LNG, I mean, you have ample sources to choose from. Why be concerned about supply security now? And they say, well, first of all, these changes in the market dynamics that our system was unable to cope with, both on the upside and on the downside. B, in this world of low oil and gas prices, if we see underinvestment going forward in our domestic resources, then we might find ourselves even more reliant on imported supplies going forward. So I think this return of supply security has been very interesting.
Thank you, Michal. That was very thorough. If you're ready, perhaps Enrico, you can share some of the slides. And Marco, I don't know if you want to unmute your mic and give us at least let us try to hear your voice. That might see if we can get this started. Unmute, Enrico.
I think, yeah. So because I just got his email, and
okay, we'll continue the conversation. Hopefully he'll join us. If I could follow up both on I think my comment relates to something Antoine and Michal, both of you said. It was interesting. Apparently there was a JP Morgan report, Global Energy Analyzer, super cycle on the horizon recently, that seemed to suggest that oil prices in 2022 would come back, and that, it seemed to be a very optimistic report. And Michal, given the last couple of points that you made, it seems like perhaps China is thinking a couple of years ahead, in the scenario that oil prices rise again. And the reason I mentioned that is BP also had an interesting recent report in which their investment reappraisal process was based on the assumption that real prices will average about $55 per barrel over the next 3 decades. There were similar statistics regarding Russia's major producer, reported by Russia's major oil producers. All of perhaps suggests that today's low prices perhaps are not as low as we think, and perhaps they will stabilize in some way, shape, or form. And if that's the case, if that's our assumption, and feel free to disagree with it, I'm no expert, what does that mean for China's continued engagement with the major oil producers in the Middle East?
And that's an interesting question. I think, you know, we're probably kind of at the well, we've already peaked the trough, the kind of the low of in the oil markets, and we're going to stabilize. I think there's a huge debate about whether or not oil prices can recover and ever get back to $100 sustainably, right? We could see it, maybe not $100, but we could see 1/4 of tightness, but sustainably. And I think that's what BP and a lot of the other majors are now reflecting, is that the energy transition is here to stay, and I think that transition might happen faster than a lot of us think. Not so much, I think there's a huge debate about whether or not oil demand peaks, and you know, with China, even though it's accelerating the electrification of its fleet, there's still a huge amount of air travel to be done, to be consumed in China, and chemical demand. And I think the Chinese, their own forecasts don't expect oil demand to peak before 2030. So there's still a huge amount of demand growth coming globally. The question then shifts to the supply side, and you know, can supplies continue to increase, be it from OPEC, Russia, the US, and therefore cap any of the gains on prices. But it does feel like we are in a world, again, notwithstanding kind of quarterly fluctuations in prices, of lower oil prices going forward. Now for China, that's a mixed bag, right? I mean, on one hand, sort of low oil prices are easier when you consider that China imports 11 million barrels of oil, 11 million barrels a day of oil. That's a massive saving if those barrels cost $70 a barrel or $35 a barrel. That's sort of hugely beneficial for its import bill. On the other hand, when lower oil prices, they hurt the domestic producers, and they make it harder to continue to focus on the domestic upstream production, which again is seen as vital for energy security. Now, China produces less than 4 million barrels a day. Again, it imports 11 million barrels a day. If it manages to increase by 100,000 barrels a day, that's not going to change the overall balance of things. But there is still kind of the psychological push to try and produce domestically as much as possible. But I think from here to the Middle East, there is, you know, I would argue, and when we can get into this a bit later, because I'm sure Antoine and Marco also have comments on the oil price, and I can show slides as well in a minute, China has actually managed to cap the share of Middle Eastern imports in its overall supplies at less than 50%. It's done a very interesting job of sort of, overall imports are high, right? The numbers are still growing as China's oil demand grows, but it has tried to insulate itself from a lot of the vulnerabilities associated with the Middle East. And I would argue that China's interest in the Middle East are not driven by energy. Energy is one small component of that. And so variations in prices lead to variations in strategies and tactics, and the way it approaches different actors. But overall, I don't think that's a defining element of its approach to the Middle East.
Antoine?
Hi, can you hear me?
Yes, Marco, we can. It's good.
Okay. Hi, Brandon. Hi, everybody. And my apologies again for this inconvenience. I'm happy that I managed to listen to you over the last 10 minutes, but I couldn't make me heard. Anyway, good morning, everybody, again. If you want, I can give my contribution as you like and when you like.
Okay, maybe what we'll do is we'll give you a minute to collect your thoughts, and Antoine, I'll give you a chance to follow up on Michal's comments, and then Marco will let you present your slides and share your knowledge with us. Antoine.
Okay, thank you.
Thanks, President. Hi, Marco. Yeah, I mean, just to build up on what Michal just said, the oil market is cyclical. So it goes in cycles. It goes in periods of high prices, which encourage more supply and discourage demand, and then price crashes, which discourage investment and discourage high-cost supply. So that's the history of the oil market, and OPEC or the dominant producers actually feed into this. OPEC always presents its role as encouraging stability in the market. In fact, it's the opposite. OPEC has opposite objectives, conflicting objectives of increasing its market share and lifting prices to increase revenue per barrel. And those two objectives are not compatible, really. So it cycles between the two. What happened with the COVID pandemic is that we went through a major price collapse, like a bigger collapse than ever experienced in the market. Because of the pandemic, because of the lockdowns, and because of the price war that the Saudis and the Russians engaged in, which pales in comparison to the pandemic in terms of the barrels impact, but really acted as an accelerator and amplifier of the movement, and in a very dramatic way, really increased the likelihood of hitting against storage capacity limits, and that had a massive impact on prices. So the consequence of this very steep drop, very unprecedented drop in demand and drop in prices, is that it will discourage supply, it will kill supply on a much larger scale than we've experienced in previous down cycles. And some of the supply that was shut in because of the low prices will not come back because it will be technically impossible or too costly to bring back. And more importantly, perhaps, new investment in capacity will be much more difficult to access. It will be much more difficult for companies to access capital. Bankers, lenders, investors will not invest or lend in the oil market as willingly as they had in the past. Actually, there was a loss of favor of the oil sector on Wall Street for a while, and the recent events probably accelerated that trend. So the likelihood of having a tight market had dramatically increased. Certainly, the dominant producers, the low-cost producers, the Saudis, the Russians, even the US will increase their market share, but the likelihood that they will also enjoy high prices is increasing. The question is timing, because we don't really know when demand will really pick up in a meaningful way. There's still a lot of uncertainty about short-term demand because of the uncertainty about the pandemic itself and its impact on the economy. So we're not really sure. And then there's the question of peak oil demand, as Michal said, and the transition towards a decarbonized energy system. I think, even if we hit peak demand, that doesn't mean we go away from oil. We will still need investment in oil. We will still need production, and that it's not a question of dropping oil entirely. So all these trends, I think, argue in favor of a very dominant Saudi market. I would add that the transition to a decarbonized world actually works in favor of the Saudis, particularly maybe the Russians, because the Saudis have a very low footprint production of hydrocarbons compared to others. And now that the capacity to measure carbon and methane is dramatically increasing, including by companies like ours, the likelihood that carbon and methane will become price differentiators in the market at the commodity level, at the equity level, is also dramatically increasing. And that will benefit the Saudis. So I think the Saudis will continue to loom very large in the energy sector, and China will loom extremely large as well, both as a producer and as a consumer.
Thank you, Antoine. Marco, please go ahead and begin with your opening remarks. Enrico, are you going to help him with the slides?
I think Andrea has it.
Okay.
Thank you, Brandon. I would kindly ask to show slide number 4.
Okay, let me share the screen then.
I am skipping the very first slides, which were highlighting our investment in the region. Just one sentence on that. Eni is historically the first oil and gas player in the North Africa. Over the last 10 years, we implemented a investment project in many countries of the Gulf, starting from Iraq, and now over the last 3 years, Oman, Bahrain, the Emirates. The idea is that as many other international energy players, we consider the Gulf as one of the most promising areas also for the difficult future we are to address. That's to say that in the energy transition with very low market prices, of course, the huge amount of low-cost reserves, huge availability of financial resources, and an advanced, comparably advanced, very advanced system of governance is definitely one place to be, not only for international companies, but of course also for Chinese NOCs and for Chinese companies, not only in the energy sector. Talking about energy in the MENA and China, I fully agree with what was saying Michal about the fact that these relations are not monopolized by energy or the need for secure energy supplies. I would say that oil supplies are the bedrock of a diversified presence of Chinese companies and Chinese government, which is more intense in the Gulf than in the Mediterranean, at least for energy. An example of that is Egypt, where there is an important strategic partnership affecting the Suez Canal Company Corporation, other infrastructure projects, and lately a project to produce electric vehicles together with the state-owned Egyptian company. But apart from that, I mean, this is a region where the Chinese are seem to be wary of get involved in many political or social risks that are affecting the area. On the other hand, the Gulf is the core of the investment, but also the bulk of energy supplies. As it was said before, with a specific attention not to depend too much on the region. And it is true that the contribution of oil imports, Chinese oil imports, is always around 40%, while other suppliers have increased over the last 5 years. Nevertheless, in the COVID months, so referring to the first months of 2020, Saudi Arabia increased very much the volumes. This is for price reasons and other reasons, but I would say that this might remain because of the wider phenomenon of gaining volumes and market shares of these actors that can rely on very low cost if compared with other suppliers. In this slide, you see those who have increased their contribution to Chinese imports, and those, in particular, Iran, that has, because of sanctions, I would say, reduce the contribution. Another comment, and that I will stop here for the time being, is the fact that COVID is driving the NOCs, the Chinese NOCs, to review their priorities. In particular, they are prioritizing domestic production. They would need, in a low price scenario, to cut off certain expensive projects abroad. Nevertheless, this scenario could also bring some very important opportunities, not only in the conventional, but I would say even more in the renewables and in the networks. Just a couple of examples. In renewables, there are projects involving, for example, UAE UAE companies and the Chinese company, very relevant, and the networks, the Chinese network company is involved in activities in Iraq and took also a relevant, a big stake in the network, power network in Oman. If you like, later on, I can focus more on the single cases for single countries. Thank you.
Thank you very much, Marco. The last point was particularly interesting, and we do hope to follow up on that in a few minutes. Maybe I can open the floor to my co-hosts. Andrea, I know you had a question. Please go ahead.
Yes. Thank you, everyone, for the very interesting presentation. It's I'm an amateur on energy, so it's great to hear people that know tons more than I do. So I would take the chance to ask your opinion, all the three of you, on the deal that was signed in late 2019 between the Chinese and the Iraqi government. For it should be a 20-year deal that should provide China with 100,000 barrels of oil per day. We have been following at ChinaMed the Iraqi debate on the deal, and it looks very controversial, especially because it was signed by a government that was about to leave the scene. But I would like to hear how would you look and contextualize this deal from that kind of Chinese perspective, energy security perspective for China. Thank you.
Marco, did you want to begin?
Yeah, thank you. May we project the slide on Iraq? It should be number 7, please. Very good question, because it's highlighting an issue, which is together energy and politics and domestic politics. Well, I think that Iraq is an archetype for energy relations between China and these countries. And it is because Iraq is, on the one hand, very promising, resource-rich country that has been increasing its production until months ago, and then we could imagine that this increase needs to be stopped for price, market reasons, and other reasons. Nevertheless, we have a country with a big potential, many projects in the pipeline, but also so many conflicts, risks, influence from regional actors, huge influence of Iran, for example, and interdependence also in the energy sector. As you can see here in the slide, China has invested a lot. I would say one of the priorities, together with the United Arab Emirates, was Iraq over the last years, up to becoming the first commercial partner. And in the last bid round, if you see on the right, much of the assets under tender were awarded also to Chinese players. Why it is an archetype? Because in Iraq, such a complicated, for international and security reasons, country, China is implementing its strategy of balanced, pragmatic approach with the principle of non-interference, something that is increasingly challenging and seems to me valid for the midterm, but I wouldn't say that this will last much longer, because in the end, in such a scenario, it is very difficult to play such an important economic role, also affecting grids, water management, so affecting the well-being of the population and the consensus by the population I would say it's very difficult without getting involved in a political and security dimension. Thank you.
Okay. If Antoine, I had a follow-up question, but Antoine, Michal, if you wanted to add something, feel free.
It's clear.
Sure. Go ahead, Antoine.
Well, you know, just in a nutshell, I mean, Iraq has some of the biggest potential for growth among oil producers, and it has a massive resource, which is pretty easy geology, pretty low cost to exploit. A huge potential hasn't been tapped. There's been some growth in recent years, but nowhere near the hopes that were lit at the end of the Iraq War back in 2003. And China is well placed to harvest that potential. The biggest issue in Iraq remains the above ground risk, the security risks, the political stability, and the difficulty between the Saudis and the Iranians. So that's the concern. I think it's, as far as China's announcements or declarations of investments and commitments, China is kind of all of the above country. It tends to make, I can't really think of a country that China is not interested in terms of oil. And it has a history of large statements about investment plans, including recently with an agreement with Iran that's been kind of leaked, not really officially reported, but vastly leaked, of a 25-year commitment to develop Iran with an unprecedented amount of dollar commitment. So those announcements can't always be taken at face value. They're not always clearly followed by implementation. But clearly, you know, Iraq has a huge potential, and China is the market for that oil.
And I would add to that, I think that the Iraqis have, in their trading and marketing activities, they have been, I think, among the first in the Middle East to catch on to the changing dynamics within the Chinese market and to more actively cooperate with the kind of independent refiners and not the state-owned majors that everybody works with, right? The Saudis are very closely sort of working with Sinopec, the biggest refiner, and it took them a while to start diversifying, whereas Iraq, they have also, just by the fact that Zhenhua operates, Zhenhua is a small, it's a small state-owned refiner, but it operates in Iraq, but they were the first to come up with a marketing agreement with Zhenhua. They've been working again with the independent refiners. They're also the first to market or to have Basra Light as one of the settlement grades on the Chinese crude contract, which has been massively appealing, even just on a political level, for the Chinese market. So, and I think they were the first movers in that respect. The Saudis now have moved to work more closely with both the Shandong, the independent refiners, and the new mega refineries, the Rongsheng and Zhejiang province. So the Saudis have capitalized on the kind of the new kingmakers, I would call them, in the Chinese energy system. But I think the Iraqis were the first movers there. But similarly, I mean, I think it's interesting that China really has managed to play this non-intervention. It's managed its diplomatic ties, perhaps inadvertently, but it's managed it really well. I remember in 2002, 2003, the concerns in China during the US-led invasion of Iraq were, what is going to happen to our assets? We are probably going to lose them. The Americans are going to bring in their companies. They sat, they waited it out, and today, almost 20 years later, they are among the biggest investors in the Iraqi upstream. But I think despite some of the concerns from the host countries, and we're seeing it in Iraq, we're seeing it in the leaked documents from Iran, their non-interference and their ability to just play the economics rather than the politics have played in their favor, and I think is something that they will continue to do as long as realistically possible, because how else can you trade with Iran, Iraq, Saudi, sell and buy technology from and buy technology from Israel? You have to remain a secondary actor politically in order to be able to manage all those contradictions.
That's a great point, Michal. And if I could just ask a follow-up question related to Iraq to each of you. I mean, and I'm going to use one of the things, Michal, you said a few minutes ago as a springboard into this question. We talk a lot about supply and demand. We haven't talked much about movement of oil. And it seems to me that when you talk about China, you also have to talk about how oil moves. And I know that seems odd given today's state of affairs where nothing's moving much, right? But it strikes me that one of the potential appeals that the Iraqi supplies have for China is the potential for overland delivery as opposed to delivery by sea. And I wonder, to the extent that, you know, Michal, you talked about energy security. Part of what I would imagine the idea behind energy security is the redundancy in delivery and movement. And so I wondered whether Iraq, out of all of the Middle East suppliers, offers an overland delivery route to China that perhaps some of the major Gulf suppliers don't.
I think that's an interesting question. I think we have to go back here to the different sort of interest groups within China and how they would view this, because there's definitely a rhetoric of vulnerabilities associated with waterborne supplies and wanting to move to onshore routes. And I think the appetite for that has changed over the years, and China has hedged against a lot of those vulnerabilities, even with building its own naval capabilities, its commercial fleet, its dominance in the South China Sea. And I think what we saw this year with US sanctions against COSCO, against the Chinese shipping company, have also accelerated China's moves towards a greater independence in terms of its commercial fleet. Now, it can't do that overnight, but still, its efforts to, or desire to, insulate its entire supply chains from US sanctions are really moving towards kind of nationalization of the entire supply chains. Pipelines have sort of come and gone because pipelines are risky as well. They might not be subject to kind of the whims of the US Navy, but and as China has seen from Russia and its willingness and or you know, ability to use pipelines as a political tool, pipelines aren't universally seen as a panacea for China's energy insecurity. But certainly, as you know, if China can hedge and if China can have a bit of both, it will try. The other point, I think, is that the appeal of pipelines is slightly decreased for the majors, perhaps not for the government, but for the majors, now that China has created a midstream company. Pipelines used to be a cash cow for the majors, but now those assets have been stripped from the majors and they've moved into, or they're gradually being moved into, a state-owned independent entity. And so the commercial appeal of pipelines is somewhat diminished for some of the state-owned majors. But I think, as Antoine said, China is something of an all of the above. And so if there is a feasible and realistic investment project that will create growth, employment, steel exports, or sort of another business opportunity, then it might pursue it with the hope that it might help a little bit on the energy security front. But I think there will be other reasons to do it.
Thank you. Marco, did you want to add something?
Yeah, very briefly. On the pipelines, I would say that the supplies to China that can increasingly rely on pipelines come from Central Asia and Russia rather than Iraq. And as for Iraq, having or not having an alternative for oil supplies wouldn't be that let's say essential to China in a wider and strategic perspective, because for them it's vital to keep the routes open for their commerce, even without considering oil. I'm referring to not only to Hormuz, of course, but also to Suez, Bab el-Mandeb. So in my view, this is the priority, long-term priority for China, to keep the routes open. And in this view, I would include the activism and the special relationship they have developed with Oman. Not only because Oman is out of the strait, and so in a geographically strategic and very, very comfortable security position, but also because it offers a very good base for all the area. And let me just remember that 70% of Omani oil goes to China. Thank you.
Thank you.
I would just agree with, I mean, it's not a question of either or. Pipelines are more expensive than tanker shipments, but they provide optionality, and it's good to have them as an option, as a hedge, if for no other reason. The other thing is, in terms of vulnerability to choke points and so on, the increase in storage obviously is a big security blanket for China. It's a huge increase. The build up in crude and product inventories has been very dramatic. But the other point I would maybe note is that China is becoming an important supplier, not just a consumer of oil, but a supplier as well through its refining activities. So the refineries were initially built up in China to decrease the country's dependence on product imports, to be more self-reliant. But in the last few years, the refineries have been increasingly an export industry. At a time when heavy industries have taken a hit in China, we've seen a very strong development of refined product exports. And
is that primarily to Japan and South Korea, or?
It's mostly to the region, if only for proximity reasons. But I think there's been two or three stages in this. One key inflection point was the lifting of the sanction waivers, the Iranian sanction waivers in May last year. Until that point, Japan and Korea had still imported oil from Iran of the waivers. But when the waivers were lifted, they stopped importing Iranian oil, but they did not really replace those barrels with oil from other countries. They replaced it with products from China. And China continued to run Iranian barrels. So Japan and Korea effectively exported their Iranian risk to China. And China started to play a much larger role as a regional refiner. Recently with COVID, we see a little bit of the same effect. Demand has taken a hit everywhere, but refinery runs have taken a bigger hit probably in Japan and Korea. At the same time, in China, we see the opposite. We've seen recently a dramatic rebound in refinery activity to actually much higher level than pre-COVID, to new records, and by a wide margin. And this is associated not just with the recovery in Chinese domestic end user demand, but also in an increase in Chinese exports of products.
Thank you. Enrico or Marco, did you have something you wanted to add?
No, thank you. Thank you.
Enrico.
Yes, thank you, Brandon, and thank you, everyone. It's a very stimulating conversation. I have a different question for each of the speakers, if you don't mind, Brandon. I would like to start with Michal. Just like, I would like to know, Michal, if the logical interference that you were mentioning before as, defining trait of Chinese, posture in the Middle East, but also in any other scenario, can be, say, maintained with the growing of Chinese economic interest in the region? Because I think that in the end, it's kind of a natural tactic for protection of investment to somehow use political leverage that you have with the recipient country when your investments are, especially after the shocks that Chinese investment experienced in Libya and in other scenarios where local instability affected and damaged Chinese interest. Then for Antoine, my question is there the relationship between the supplying among the three champions in the supply side, US, Russia, and Saudi Arabia, given the fact that China is the major protagonist in the demand side, you see is the decoupling between China and the US is changing the interplay between the three actors on the supply side? Do you see a new dynamic emerging on this respect? And for Marco, if at the corporate level in the energy field, you see the coupling also happening in the sense that, we noticed, especially recently, the Italian company team, and the decision taken on Huawei, that has been quite controversial. And so I would like to know whether in the energy sector there is also something like a sentiment or some indicators that are pushing in the similar direction that we are seeing in the IT and technology.
Okay, looks like maybe we'll start in the reverse order that you asked, and Marco, if you want to begin.
Okay, can you hear me?
Yes.
Okay. Well, the short answer is no. I would say that the coupling for the time being, and until we have an expected world again divided in areas of influence that are not compatible to each other, I would say that the coupling is limited to very important frontier technological issues or security issues. And I wouldn't say, not only for energy, but for the wider international economy, I wouldn't say that we can even imagine a world, at least for the next 10 years, where the two big economic players so heavily intertwined are separated. As Antoine has very well underlined in his contributions, his comments, with COVID and the price war, we have also discovered how influential is China when it is to decrease the oil demand, and how influential is also for all the producers, including American producers. I would say that the outcome of the coupling is a long-term perspective that would encourage not only China and the US, but all the mid actors and the players in the Middle East to make a choice, such an hard, difficult choice of belonging to a certain sphere of influence in the economic sectors, which is something that at least as a European player, as a European citizens, we should not hope it happens. So I would say not for the time being possible in the long term, but very detrimental to the well-being of all the actors.
Thank you, Marco. Michal, you want to address Enrico's question?
Sure, it was a great question. Before that, if I may, just on something Marco mentioned on decoupling, I mean, I totally agree that it's disastrous for the world and that it's something that it's hard to fathom when the global economy is so integrated. But aren't we already seeing the world being asked to make a choice? If we look at Huawei, European countries are being asked not to use Huawei. And even if we cannot imagine it, I think the Chinese are already starting to think again. If you look at the two sessions and some of the investments that China's pledging in new infrastructure, new urbanization, I think that is essentially accelerating the electrification of the Chinese economy through indigenous technology to the extent possible. And even though China might not be planning on a decoupling, and it has been busy saying decoupling is not good for anyone, it's also hedging by preparing the groundwork for a world where China cannot access some Western technologies. So I think there might be a reality that happens, and we don't know what it's going to look like or what it could look like, but there are things that are already happening that are quite worrying and that we should keep in mind. But in terms of non-involvement and sort of non-interference, I think Libya was a really interesting case because I remember globally it was seen, remember when the Chinese carrier came and airlifted or sort of lifted out all the Chinese employees from Libya, and it was seen globally as kind of China's coming out, right? China's debut on the global military scene. But in China, it was hugely contested. It was seen as a very expensive expensive experiment that would potentially create a precedent that was not necessarily something that China was comfortable doing. And I remember it led to a whole series of sort of risk management practices, both at the corporate level, at the government level. I think very much a sort of inward looking rather than an outward looking response from China. It wasn't how do we, use this for leverage, or what do we learn for this for, future involvement. It was actually, hang on, what's just happened here, and maybe we've exceeded our capabilities or what we would like to project in terms of capabilities. Now, obviously, we've moved on since Libya. But I still think that, we've been having, I think, this debate on the Middle East ever since. I mean, it was, you read articles back to the Kuwait invasion, to the Iraqi invasion of Kuwait in the 1990s, and then to the US-led invasion of Iraq in 2002, 2003. People have been asking that question. China will have to stop sitting on the fence and will have to take a position related to its economic interests. Well, it hasn't yet. And I think there is very limited appetite from China to do so. The Middle East is seen, and they have studied the Middle East. I think they enjoy, I mean, enjoy is maybe not a good word, but they see the Middle East as a very interesting observation ground for the kind of state of rivalry or interplay between global powers, as the state of play of modern technology and weapon systems. But they have more than once referred to it as sort of the graveyard of empires. And why? Why would they have to sort of involve themselves more than than if they can get away with just an economic involvement? And they do have, right, there are strings attached, and those strings are attached to China's core interests. It's Taiwan, it's human rights, it's Hong Kong, it's things like that, and gaining support in international forums for those things. But China, I don't see a situation where China would put boots on the ground in Iraq. It hasn't done so in Afghanistan or in Central Asia, that are areas that are much closer to its borders and of a greater strategic importance. Why do so for the Middle East? And again, also in terms of oil, let's put it in perspective. Yes, China imports almost 50% of its oil from the Middle East, but oil is 18% of the energy mix. And so all in all, China's sort of external dependence for energy is around 10%.
Thank you. Antoine, do you want to add to that?
Yeah, sure. To me, a key point is that the growing role of the three big producers, the Saudis, the Russians, and the US in the market, is not just a question of market share. It's increasingly reflected in their role in the governance regime of the oil market. It started with the partnership between the Saudis and the Russians, which started in late 2016 with the OPEC Plus agreement. This was never institutionalized. The Saudis have tried to institutionalize it, to make it very formal. The Russians have resisted making it formal, but they have stuck with it. Even though they kept the suspense at every meeting, they eventually always stuck with it, and I think they will stuck with it because their interests are aligned. They were even aligned in the price war that they did in early March, which was described as a conflict and as a collective suicide. In fact, I think it was a very smart move by both of them that benefited both of them. Now the US is being drawn into this alliance, and one of the key developments in the COVID crisis has been that the US has shifted from being anti-OPEC to being aggressively, vocally, dramatically pro-OPEC, to being a cheerleader of OPEC, and even a participant in the OPEC cuts, basically, in the OPEC plus agreement. So this is, to me, a turning point in the history of the governance of the oil market. We're moving really from a system where OPEC was running the supply side and was balanced by the IEA and the strategic reserves of major consumer countries, to a system that's much more fragmented in a way, much more amorphous, where the IEA includes more producers than OPEC, and OPEC includes very large consumers as well. But also to a system where really those big three dominate. It's more than 1/3 of the production capacity. They really, the agreement that helped rebalance the market after the demand collapse of COVID was really engineered by President Trump calling President Putin and calling MBS and getting the three partners to agree on the framework of a major production. So this is a game changer. Of course, the governance regime of the US itself is very different and doesn't allow participating in government-mandated cuts where other countries can. But certainly, the US has delivered. The US can no longer be a free rider on OPEC cuts. It has to become a participant. And that's what the price war and the main collapse made clear. It really pushed the US over the edge into being a participant in the governance, no longer a free rider. Now, where does that leave China? China has been kind of out of the picture, and in the OPEC plus agreement, in the G20 meeting in Riyadh that led to the OPEC plus agreement, China was actually quite discreet. But I think this will change because China's market power is also increasing as an importer, as a dominant importer by a very wide margin. And I think it will enjoy this power, and it's waking up to the potential that this power offers. So I think we're going to see a change. Recently, I was on a conference with Remnant University that led to a solemn declaration on the think tank about the need to stabilize the oil market. It's a kind of, there's no concrete effect to a declaration of that nature, but I see it as very symbolic of a willingness to be more assertive and of what I think will emerge, which will be a kind of G4 of energy, with the 3 or 4 dominant players really taking the lead in setting the rules of the market.
Thank you. Ori, did you have a question?
Yeah, unless anyone has a follow-up on this specific theme, I wanted to ask all 3 of you. These are fascinating issues, and we keep focusing on the oil part of the energy game, as it were. I'm wondering about something that I think, Antoine, you mentioned earlier regarding the renewable energies or alternative energies, or whichever way we want to call it. And China's growing for over a decade. It's not a new thing anymore. Role in that, and of course within China. But here, I would like us to I would like to hear your thoughts on China's role in that regard within this region, within the Middle East, Mediterranean region. Do you see China getting involved with that? Do you see China investing in these issues? We heard earlier today you mentioned some of the deals regarding electric cars and so on and so forth. So I would be very, very happy to hear your thoughts on this issue. Thank you.
Okay, who wants to start with the renewables? Michal, go ahead.
Sure, thanks. It's a good question, interesting question. I think just if I may just follow up on Antoine's comment for 1 second on, I agree that China's sort of market power is increasing, and it was interesting, it launched a crude futures contract in order to start setting prices. And what we've seen, if the reports are true, that recently the majors want to negotiate prices sort of jointly together with their big suppliers as the Saudis. On one hand, it shows that the crude futures contract isn't working yet, but that they do want to assert that pricing power. So I agree with you. I think there's certainly a move to try and assert pricing power, much more than kind of geopolitical, strategic, physical power in the Middle East. On the issue of renewables, you know, China, as you mentioned, it is one of the biggest, it's the biggest growing market in terms of installations domestically. It's one of the biggest clean tech and green tech exporters globally. And there is no reason why it shouldn't become, obviously this is sort of an industrial question for China. It's not so much, to the extent that we can distinguish between the kind of climate change, carbon emissions story and an industrial story. I think for China, it's heavily weighted towards industrial competitiveness and its ability to dominate or to at least lead global supply chains. And so in terms of wind, solar, energy efficiencies, to the extent that Middle Eastern or sort of Med countries will want to to upgrade, I guess, there, or sort of want to think about the energy transition and start looking at different ways to consume energy and not to be overly reliant on fossil fuels, China will, I think, happily provide the infrastructure, the logistics, the hardware, the software, and anything that it can export. I think there's also an interesting discussion, you know, when we look at China and we look at technology, we tend to think, or there tends to be this discussion about, can China innovate? Is it a high enough quality? Can China really compete? And I think actually the answer to that is maybe China won't create the new Tesla, but China is the one country that can commercialize a lot of these technologies, batteries, EVs. Interestingly, you know, in the Chinese market, two-wheeler EVs and low-speed electric vehicles have increased exponentially, much more than electric vehicles in terms of kind of the growth numbers. And those can be exported. They're much cheaper. Again, they don't have to compete with a Tesla, but they can make great inroads into Middle East and lower income countries and support, again, the electrification of those economies. Whether those economies decarbonize will then depend on the choices in the power sector and whether they shift to renewables. And I think China has huge advantages in the hardware. China isn't as good in the software. So China isn't as good in making sure that renewables are connected to the grid in these management technologies, but it can certainly provide the, again, the kind of finished goods that you then connect to the grids.
Thank you, Michal. Antoine, did you want to follow up, please?
Yeah, I agree with what Michal said. To me, it's clear China is becoming a leader in renewable energy and new energies. It's the biggest producer of wind turbines, of solar panels, electric cars in terms of units produced. It's also achieving a kind of monopoly power, especially in terms of rare earth, cobalt, lithium. It's a key provider of key components of the electrification of the energy system worldwide. So the dependency that countries like the US or Europe used to have on oil producers of the Middle East and others is now shifting to dependency on China for the key building blocks of the new energy system, which I think these countries, these consuming countries, have not really waken up fully to yet. Is China capable of innovation? Yes, I think it's definitely entered the stage where it is a leading innovator. For a long time, it was a follower. It was an adopter of technologies developed elsewhere. But it has now leapfrogged and jumped ahead of Western countries in many ways, and it's achieving real innovation power. It has research institutes all over the place, including here in France, which are very powerful, doing very really cutting-edge research. So it is a major player in that space. It has some competitive advantages, particularly in terms of electrification. It can really build up transmission lines faster than any Western country, and that gives it a bit of an edge. So it's I think it's going to be a very, very important key strategic player. And all these developments, you know, started partly to meet domestic needs in energy. But as Michal said, the new energy sectors and electric vehicles, that has become a strategic industry for China, an export industry, and an opportunity for China to catch up, to converge with the US, for example, as a global vehicle supplier.
Which also begs the question of decoupling again from a very, very different angle.
And also, or just to jump in, I think this is one of the sectors where China can become dominant in standard setting as well. Yep. In defining sort of how you extract those minerals, how you process them, how they fit into the various kind of end uses. China can, I think it is increasingly active in the kind of standard setting mechanisms globally, but it also has the power because it concentrates such a big chunk of the supply chain to set those standards.
And I wouldn't be surprised if all of this can also be linked to the 5G issues, and then we have the full package.
You know, looking at Saudi Arabia, I don't think it's a coincidence that they've stated quite clearly that they would like 50% of their electrical power to come from renewables by 2030, which seems very ambitious given the current state of affairs there. But it's interesting that their focus is on wind and solar, which are two areas that we know China is extremely active in. And so you have a sort of an interdependence there, I think, that works. I would be remiss sitting here in Tel Aviv if I let a discussion about China and the Middle East go by without asking an Iran-related question. Antoine, you had mentioned that Iraq is one of the biggest potential growth areas for oil production in the region. I guess my question is, we know in the short term that investing in Iran's energy sector is difficult because of this current state of affairs with sanctions. But in a more of a medium to long-term scenario, do we see China invest in the energy sector, leaving aside the hundreds of billions of dollars being talked about in the popular media today, just focusing on energy? We know that China and Iran have had sort of an on and off again relationship, but I wanted to hear from sort of a market perspective whether that was a real potential or again, something that seems more real on paper than in reality.
No, I think it's a real prospect. I think China is going to be quite clever about playing the Iranian card as it has been over the last few years. So I think it's given an opportunity, a commercial and strategic opportunity by the sanctions to partner with Iran, and the sanctions regime is really throwing Iran in China's arms in many ways. But I think at the same time, China is very careful to not overcommit itself and to maintain room for maneuver and to balance its any engagement with Iran with balancing engagements in the region with the Saudis, with Israel as well. So I think it's going to be a very careful, clever player. And there are, of course, while there are many opportunities in Iran and many competitive advantages to the country, there's many risks, not just from the US and from sanctions, but from political stability, from issues of corruption. So there's many factors to take into consideration there.
Thank you. Marco, Michal, did you have anything to add on China-Iran?
I think on the government side of things, of course, the government has been very vocal about saying that its actions will not be determined by US sanctions, right? So that's been kind of the official line, and yet it's been quite careful to balance, as Antoine said, its relations. I think the real sticking point of sanctions is the corporate side, that the Chinese companies, sort of the big three, the majors, they cannot afford to be sanctioned on US markets. And I think that is the real source of sort of the biggest source of caution, because we have seen, I think the trade flows are still continuing in various ways, and they're harder to see, but they do seem to be continuing, and they're sort of now kind of designated actors that do business with Iran on the energy side, and that are insulated from, they don't have any activities or any engagement in the US market, and so they're insulated from any potential sanctions. But I think that's really the biggest impediment, because China, I think, fundamentally views Iran as an emerging power in the region. There is a lot of talk about the kind of longevity of the Iranian civilization and the Chinese civilization, and I don't think that is just talk. I don't think that's just empty talk. I think there is I think the Chinese fundamentally appreciate sort of the cultural aspect and again, that history, even though relations, as you said, Brandon, have not been easy. I think that China is taking a long view on Iran, and energy relations and others are just part of that. And so if they have to tone them down now for geopolitical reasons, they will, but fundamentally, I think they will continue.
Thank you.
If I may, just a comment on Iran from my side. Well, I agree with what was said. Iran is the most important country in the region for gas reserves, huge potential, a market of 90 million people, very promising. So, I mean, should be a must go for international and Chinese companies. Nevertheless, either international and Chinese company have not only the problem of sanctions, but there are so many other structural problems that are not helping in considering a bigger engagement in the country. Apart from that, I would say that China sees Iran more as a political than a economic partner. And looking at the nuances that arise, I think that one of the reasons why China is insisting in this partnership is, of course, to balance the influence of the U.S. in the region, trying to keep this actor in some sufficient force, which is an indirect but relevant way of positioning China in the international arena. I would not, let's say, underestimate the relevance of these components of a Chinese economy, which are, let's say, not tangible by U.S. sanctions, and still keep connections with China, with Iran and other so-called rough states.
Thank you, Marco. I think, Andrea, you had a question, and then Ori.
Yep. I would bring back the discussion to technology and Chinese companies, but I would be more on the kind of traditional energy side. My question is, how competitive are the big Chinese oil companies compared to their international counterparts? I remember reading some article in Chinese media basically saying that gaining a good share of the market, gaining a strong presence in Iraq or Sudan was fairly easy because of diplomatic factors. But many other countries in the region are much more difficult to sort of penetrate, either because of strong local international competition or because we don't have the technology to develop certain fields there. So how do they compare from a management and technological point of view to the big international companies?
I can speak for my sector. As said before, for renewables and new energies, they are very competitive, especially for supply. So really first players in the sector. For oil and gas, conventional or non-conventional, where they reached quite relevant levels of, let's say, technological capability, but for the most complicated frontier projects and in a situation of cost reduction, I would say that many international oil companies still maintain some margin of competition vis-a-vis Chinese NOCs, which have, on the other hand, the strong support of the Chinese financial and public sector.
I think Marco probably knows better than, certainly than me, more experience directly from the operational side, but I would tend to agree that China is a leader in renewable energy. In oil and gas, conventional is still lagging behind in terms of technological know-how. It's low cost, but it's not seen, I think, as high quality. And really, there's no Chinese equivalent to the big oil service companies like Schlumberger, Halliburton, the Baker Hughes. This is still a monopoly of the West, or a market strongly dominated by those three companies. And there's no Chinese equivalent to that. And Chinese domestic production is actually quite high cost, which is part of the reason why when the price goes down, we see we saw suddenly in 2014, 2015, a drop in domestic production, an increase in reliance on imports. It's still a very high cost production, partly because of geological reasons, but partly because of your lack of technical competitiveness.
And I think it's also the way the majors are structured, that they have in-house service companies and in-house sort of a wide variety of in-house services, but also other assets like, you know, universities and financial assets that they need to feed. And so they aren't the most efficient. I think in the countries where they did have an appeal, as you pointed out, Andrea, is where they were able to come with a package deal, either financing or again bring, I mean, in the 80s and 90s, the Chinese were extremely dominant in the service sectors in the Middle East. So their ability to bring those package deals has been quite attractive and appealing. But you know, the Chinese aren't heavily involved in the Saudi upstream, or they're not involved at all, or in the countries that don't need either the financial help or the technical, be it service companies or other expertise, they are not present. I think in Iran, one of the issues was that they lagged. You know, there was talk about the Chinese backing out of some of the projects or reducing their activity in some of the upstream projects. That was not because of geopolitical pressure, though it was sort of useful in that context. It was because they didn't have, I think it was the liquefaction capacity in some of the gas fields, and they just couldn't maintain those investments and sort of help with the operational side of things.
Okay, I think I'll give you the privilege of the last question because I don't want to keep our speakers much longer than what we promised them. So go ahead, please.
I'll be quick. So if I brought the renewables earlier, now I'd like to move to electricity and grid. And if Brandon was asking about Iran, then I'll ask about Israel. But I think it also relates to what happens in many countries in Europe, which is Chinese investments or attempted investments within the energy market, within the electricity production market in Israel, and perhaps grid as well. So I'm wondering if you have any thoughts about these kinds of investments and let's say the incentives for them, the reasons, and where they can lead.
My comment is that in principle, and depending, of course, of different situations on the ground, but for most populated countries, the interest of Chinese also in the electricity sector is to go downstream. I mean, to get involved in the networks and try to enter also the downstream in principle. Then this is very, very complicated for any operator, international, be it Chinese or European, and should be considered distinguishing in the different countries. But as we see, as mentioned before, they are entering and have made investments in Iraq, in Oman, in other countries in the grids, which is on the one hand a typical attitude of the Chinese, which have a strong industrial capacity on that, and on the other hand, a way to integrate a potential market for the either supplies or even other technologies that they are developing.
Thank you, Marco. Antoine or Michal, did you want to add something on this point?
China is a huge player in electricity. China electrified its own country in record time. In about 10 years, it extended electricity services to about 1 billion people. So it's something no other country has done. It's done it at great cost to the environment, which is now paying the price for. But it was a remarkable achievement. And now, as the world is moving towards electricity, away from oil and gas and towards electrification, China has put, I think, electricity at the center of its Belt and Road Initiative. It's really a key component of the BRI project. And there would be lots to say about this, but I think there's something visionary about the BRI view of a global electricity network. It's a really interesting idea with a lot of interesting potential, but it's also cause for serious concern for many countries. The idea of being dependent on China, and so far the track record of the BRI has been, I would say, probably seen as mixed. There's been concerns about financial dependence on China, issues of debt repayment, and so on, but also concerns about the climate footprint of the Belt and Road Initiative, and a lot of reliance on coal in countries like Pakistan, even as coal was being decreased or weeded out of China itself. So it's a controversial issue, and it's a very important issue, very central to China's BRI vision.
I think, you know, Israel has woken up, I guess, in the last decade or so to the appeal of Chinese investments, you know, that the financing potentially that comes with it, and just the ability to get things done relatively quickly, relatively efficiently, and I think the power grids are no exception to that. I think there are two main challenges associated, you know, and State Grid has its vision of the interconnected grid, and they have offices globally, and they're doing a huge amount of work again to sort of electrify the world. One challenge is also related to the experiences of the Chinese market. Yes, it has electrified rapidly, and you know, the long distance transmission lines are phenomenal, but the downstream side that Marco was talking about is not market driven. That is sort of the next phase for China as well. It's to develop these market mechanisms that will allow, you know, the electrification of the future, where, you know, where consumers buy and sell to the grid, and that's China's challenge, and I think that will also be its challenge when trying to integrate downstream in third countries. And the other goes back to sort of the technology, the US side of things, is I think more and more countries are starting to look at critical infrastructure and China's role in it. I think Israel is only in very preliminary stages. I mean, there's more growing pressure from the US to review Chinese investments, but Israel in itself, I think, I would argue it lacks the expertise on China, or even the bandwidth to look at China holistically. But I think it will also come under great pressure to review Chinese investments and to define what is critical infrastructure, but the power sector could become something that is seen as critical infrastructure.
Michal, thank you. That's a great point, and a theme that comes up in other conversations we've had over the course of this series. So thank you. I think the time's come for me to thank you all for your time. I hope to be able to meet you all face to face under better circumstances. If not here in Tel Aviv, then perhaps in Italy. But thank you all for joining us for this concluding session of our series on China in the Mid-Med. I wish you all continued health, and I hope we can talk again soon.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you very much.
You take care.